I'm Ashley Redmond from Morningstar.ca. Preliminary performance numbers are in as of the end of July, and it looks like most equity funds were off to a great start. I have Achilles here with me. He's a fund analyst here at Morningstar, and we're going to discuss some of the results. So Achilles, what was the driver behind the U.S. and global equity funds, and did it have something to do with the Fed's comments, tapering is not tightening?
Definitely. The Fed came into explanation that if they stop repurchasing bonds, doesn't mean that they will raise rates at the same time. They commented that the rates will stay low as long as they have to. So that gave some support to the markets, and it was also helped out around the globe from other central banks that followed the accommodating policy.
And what are some of the other top performing categories that investors would want to know about?
Canadian equity category performed well. It got some support from the Canadian dollar, which at the beginning of the month hit an almost 2-year low, but then it got appreciation and helped the category overall, as well as higher prices in commodities and energy. On the macro level, the economy seems that is following a trend with a strengthening U.S. economy, and this is something to be expected on the long term, as well as the housing market seems to be more resilient and landing in softly.
Okay, and did any categories surprise you? Specifically last month, in the last month actually, there's been a lot of talk about the Japanese yen. So was that a big surprise?
The Japanese market has become very volatile, and the reason is that it's fairly correlated with the Japanese yen. That one of the reasons is the representation of exporters in the Japanese market. So with all the monetary action that the central bank is applying, the markets tend to respond very volatile. So on this month, despite the first 3 weeks of positive performance, it managed in the last week to lose all this ground because mainly of a strengthening yen and at the same point mixed earning results of these companies.
Okay, and when I was taking a look and going through your list, Morningstar Canadian Real Estate Equity was at the very bottom.
Yes, interest-sensitive categories such as bond and real estate didn't manage to rebound as well this month, despite the assurance for low rates for the foreseeable future. REITs do need cheap capital in order to expand, and as rates go up, they have to spend more in expanding, and that is one of the reasons why REITs did not perform as well.
And what about the precious metals category? Because I remember last month it was a total disaster.
Yes, gold and other precious metals got support by the recent comments from the central bank, and the miners managed to get traction out of that and have a solid performance with around 9% for the end of the month.
Great. Thanks so much, Achilles.
You're welcome.
To find out more on fund performance, go to the Insight section of Morningstar.ca.